Good morning, ladies and gentlemen. This is Brad Matheny. Today is January 8th. This is your custom metals and market cycle trend update. What I'm going to try to highlight to you right now is a very important cycle trend that could be extremely opportunistic for those that are paying attention. First off, number one, we've extended through this dual cycle phase that we're ending in this secondary cycle phase, which remember, these are approximately 7.5 year cycles. So from 2016, do the math real quick, that's going to put us near the end of 2023 for us to end this cycle phase. Then we will start a new cycle phase. Does it mean we could see a massive bottom in 2023? No. It means that we're likely going to see some sort of a reflation cycle phase to the upside, in my opinion. What that would mean is this accumulation cycle phase would move downward, showing a reflationary trend back up to previous highs, maybe a little bit higher. But understand that we've seen a big move in metals. We've seen accumulation in metals take place after a deep low, and we've seen a big upward cycle trend in metals right here. This is the custom metals trend index, which is very indicative of a major bottom. Metals tend to bottom very quickly. So remember, in 2008, the actual bottom in the market took place on December 24th. Metals had already started to rally back out of it. The COVID low, before the markets actually rallied back up to new highs, gold rallied to new highs literally just a few weeks, 5-6 weeks after the COVID bottom. When we had the base here in early 2021, the markets were extremely high. This was a deflationary cycle phase for gold. Gold was not on the focus of traders, while the meme stocks and everybody and all of the real estate market was going crazy. Everybody was piling money into real estate and meme stocks and AMC and GameStop and what have you. Now we saw this rollover as the Fed started to raise inflation. Raise interest rates and talk about inflationary concerns. All of a sudden, hedging became even more important. We rallied to new highs. We rolled back over, had a deflationary cycle phase as the markets moved down throughout 2022. You can see throughout all of 2022, the markets moved downward. But what happened here? Gold and my trend index bottomed in basically September, October of 2022, and it started to rally back out of this. This is a very strong indication that an upward trend is setting up in the U.S. and global markets, a reflation trade. If we see this continue to push higher to new all-time highs, I can almost guarantee you that a reflation trade, a base or a bottom, is going to be setting up here. And we're going to move to new all-time highs in gold and silver while the U.S. stock market continues to rally, just like we saw in 2002, 3, 4, 5. Now, let me come over here and take a look at this with you, because I've highlighted on this chart, I've highlighted data that I want you to be aware of going back to 2003, 4, 5. So here's the 2003, 4, 5 area back over here in this little blue box. And even though I don't have data going back far enough here, you can see that gold rallied more than 300% over that time frame. And now we've been consolidating into this sideways basing level. And for gold to potentially rally another 300%, we would likely have to see gold move from this area up into approximately this area. And that would be from the deep, deep lows that we saw in 2015 all the way up to 347. Currently, gold is trading at 173, which would be a 100% rally phase from where we're at right now. But if we were to consider, now also pay attention to how gold reacts during these time frames. Gold starts to anticipate crisis and concern, then rolls sideways during a deflationary phase, then begins to base and bottom and move higher as the deflationary, reflationary cycle trend occurs. Okay, obviously we had a deflationary cycle phase here. Then we started to see gold start to move higher from this level and really start to accumulate This was greater concern with where's the next crisis event coming. We had the crisis event with COVID. We saw a bit of a reflation trade here in gold, and now what I believe we're going to see is a big reflation trade in gold while the U.S. markets continue to move higher. I've drawn this out here saying that I think we're going to see by 2024, 2025, a retest of the all-time highs. But ideally, ladies and gentlemen, what's going to happen here is we're going to push even higher. We're going to push up into these target areas based on my analysis, which means we're going to have kind of a rally that looks like this, maybe up in this area, and then here, and then up in here, rolling over into a deeper correction. And this deeper correction is going to be, now it may not last as long as I've drawn here, but this type of a correction could be 1 or 2 years, maybe a little longer to the downside, and would likely attempt to see a 35 to 55% downside move targeting these areas over here. This is where I think the real upside potential for gold is, right in this area, which if I were to draw it right here would be really kind of this area here. And I believe this is going to be a massive blow off phase for gold and silver. Same thing with the markets before we attempt to roll over. And this would be a 400% move in gold. So you figure we're about 1800 right now. You figure from the 1800 level, let's call it, so we do the math real quick, 36 to 72. That would put us at about $9,900 gold based on my analysis. That would mean $9,995 roughly for gold by, say, 2025, 6, 7, 8. And that could last, it could see an even bigger blow off top. Excuse me, quick little sneeze. So now, let's take a look over here at the actual metals index. Gold, you can see, is starting to reflate quite a bit higher. I believe the next phase is to move back into what I'm calling the yellow brick road here, between these two yellow lines, and then continue to reflate higher. Gold and silver, platinum, precious metals, I think we're just starting another big phase like this. Many other people out there are telling you that it's going to go lower, the markets are going to collapse. I don't see that happening. As long as there's no major crisis event, I believe that we're starting basically a 2003, 4, 5, 6, 7, 8 time frame over the next 5, 6 years, which will lead to new all-time highs, lead to massive hedging opportunity in precious metals, platinum, silver, and then in the 2028, 29, 30 time frame, we could see some sort of a crisis event. That's my opinion. And we have the rotational modeling system, and then we have the volatility index. The volatility index is starting to move higher. I believe we're going to see a new cycle phase to the upside off of these deep COVID lows. And this is going to put us in a range here where the next cycle phase could be even more aggressive to the upside than the previous cycle phase back here off the 2009 bottom. So be aware that we're at a very interesting juncture in the markets. And if my analysis is correct, you should be safely protecting your capital, efficiently hedging into metals in preparation for anything over the next 5, 6 years, because metals will act as a hedge against global market crisis and concerns, and then preparing for the 2027, 28, 29 potential crisis event, which I believe is almost guaranteed to happen. I just don't know exactly when yet. We'll know more as we dig into the details and figure out what's actually coming. But get ready. Metals, I cannot tell you how unique this is in the market. This is a real once-in-a-lifetime opportunity. I've been watching people who have been actively trying to short the markets over the last 2-3 months, and it's just amazing how everyone is getting this wrong. The deflationary cycle has apparently ended. We're seeing a new appreciation cycle phase. There's a huge amount of demographics, nearly 170 million people in the United States that are actively working, contributing, and investing. We could have a very similar cycle to 2002, 3, 4 that nobody's really seen. Nobody is seeing it right now, that we are post dot-com bubble, post 9/11 event. We're in a reflationary cycle trend that is lacking a crisis catalyst event in the U.S. market right now. As long as jobs stay strong, consumers stay strong, economy stays strong, we'll likely see GDP roll into moderate positive nature. We'll likely see continued U.S. economic strength, U.S. dollar strength, and the foreign markets, Europe, parts of Europe, possibly Africa, most of Asia, and even some, let's call them B-level global economies, which could be Japan, Canada, South America, Mexico. These could all move into more of a deeper crisis event over the next 3 to 5 years. We just have to see how it plays out. But right now, the strength are going to be in the A-level economies, which in my opinion is the U.S. dollar-based assets, which is going to potentially drive equities valuations in the U.S. higher, as well as hedging. The world will hedge against perceived risk by buying gold, silver, and platinum. All right, guys, more soon, but get ready. This is going to get really exciting the next 7 to 10 years.